Welcome back. TeamLease is the company on our radar. The stock is down 5%. Now, on a year-on-year basis, the company's revenues are up 23%, but profits have declined 10% year-on-year on account of a drop in margins. Though on a sequential basis, there is a pickup in revenue, 8.5%, a marginal expansion in the company's margins too. It's the general staffing and the HR business which has done well for the company, while the specialized staffing, high-margin IT hiring that the company does has been under pressure. Ramani Dathi, CFO of the company, is now with us on the show. Thank you very much, ma'am, for joining in. This is Rima here. First, if you could tell us this quarter's numbers, 8.5% QOQ, 23% on a year-on-year basis. Was there an element of festive-related hiring? And will Q3 be as strong as Q2 or even better on account of the festival-related pickup that we typically see in hiring?
Thank you, Rima. So this quarter, the festive-specific hiring would be very minimal. It's about 2,000 to 3,000 because now we are catering to across the spectrum, including manufacturing, pharma, and other emerging sectors. So the portfolio is much wider compared to the prior years where we used to have almost 20-30% contribution during these festive quarters, coming from especially the festive-specific hirings. So whereas now we have been steadily doing about 15,000 of quarterly net headcount addition in our staffing business, this quarter specifically at 2,000-3,000 is specific to the festive requirement. Otherwise, for the quarter, we did about 18,000 net headcount addition. For the first half of this year, we did about 31,000. And on a year-on-year basis, almost 48,000 is the net headcount addition we did. This quarter, as well as Q3, the outlook for BFSI is a little below our expectation, especially in the sales profiles. Within BFSI, there are certain restrictions issued by RBI. That has impacted the BFSI growth for Q2, and it will continue for Q3 as well. Barring that, across all other sectors, we are expecting at least 18 to 20% year-on-year growth.
Okay. Ramani, let's talk about specific segments then, because there's a marginal uptick in margins for general staffing. It's 1.1% versus 1% sequentially, but it is lower than what you had seen earlier. Earlier, it was around 1.2 to 1.3%. This was a few quarters back. Do you go back to these margin levels? What is the outlook for margins in general staffing?
Yeah, no, we'll be consistently expanding our margins as well because Q1 we had taken a huge hit in releasing all the NEEM trainees under our apprenticeship business. So that has an overall annualized impact of 20 crore on our profits. So we have already hit our rock bottom in Q1. So from here onwards, there'll be a consistent improvement in absolute profits as well as margins for staffing business. Converting that into specific basis points is a little difficult for us given the nature of our business, depending on what salary levels we hire the associates, that kind of impacts the margin profiles. But on absolute profits, we are confident that we can post strong double-digit growth sequentially.
So, Ramani, the only sector where you are seeing weakness is BFSI-related hiring on account of RBI restriction. How much does it contribute, this particular sector, to your overall revenues? Because even after this, you've still recorded a 24% jump in your generalized staffing top line. So just wanted to understand the impact of particularly this BFSI-related headwind.
Yeah, we have about 20% of our revenue coming from BFSI sectors, and Q2 BFSI for us is muted. But Q3, we are expecting that there'll be a slight drop in our BFSI headcount on account of these RBI restrictions. However, on a net level, we are still confident of posting a positive headcount growth in staffing as well as our VA business in Q3.
Okay, 20% of generalized staffing comes from BFSI, right?
That's right.
But and how much lower was BFSI, if I may ask, in Q2? And what will be the extent of rebound in Q3?
In Q2, we had a muted growth from BFSI. So the entire net addition that we did in Q2 has come mainly from consumer, retail, telecom, manufacturing, and other emerging sectors. And Q3, we are expecting a slight dip in BFSI.
Okay. You are expecting slight dip in BFSI in Q3, but Q4, so it should see some rebound according to you. You have been talking about enhancing your HR tech portfolio. First up, how big is it? And you've been looking at M&A discussions being in the pipeline as well. Anything that is finalized, something that we can hear about in this calendar year, maybe this financial year?
Yeah. In our HR services, we have mainly three businesses. EdTech, which is close to about 100 crore in revenue, consistently been profitable. So that business will continue to grow at a 25 to 30% year-on-year growth, both on revenues as well as profits. We have a RegTech business wherein we offer compliance services. That is about 50 crore in revenue and about, again, 6 to 8% operating profit margin. So that business will also continue to grow at 20-25% growth rate. The third segment, which is the HR tech services, we believe that business has larger potential for cross-selling opportunities with our staffing business and degree apprenticeship business. So in that business, currently, organically, we are doing close to about 20 crore revenue, but this is the segment where we are looking for active M&A opportunities. Either in Q3 or Q4, we are hoping that we should be able to close at least 1 or 2 deals to expand our portfolio of product offerings in HR tech solutions.
Okay, and this is different from the higher tech platform which the company is investing in, which will go live in FY26, or it's the same?
No, it's different because higher tech is an organic investment that we are trying to develop.
So tell us a little bit more about higher tech.
Yeah. So higher tech is a technology platform which we are developing especially to boost the hiring engine in our staffing and specialized staffing businesses, because in any given month in staffing business, we are hiring close to 8,000 new headcount. And in specialized staffing, we are doing about 500 new hirings. Almost 40% of our direct expenses go into the recruitment related costs. So we are trying to optimize those costs, which are, again, growing linearly in line with revenue growth. And if we can increase our recruiter productivity, our matching engine, so then it can accelerate our revenue growth as well as optimize our costs, leading to margin expansion, further margin expansion. So this investment will take closely about 20 crore overall, spread over 18 months. And we are expecting this project to go live next year.
Okay. All right, Ramani, thank you so much for joining in today with those insights and what the business is looking like, especially what the outlook is going forward as well. That's the word coming in from TeamLease. The stock has recovered sharply from the lows, but still down around 5%. We'll do one thing. We'll slip into a short break for now. When we return, we'll discuss market technicals with Soni Patnaik from JM Financial Services and also discuss the top trading bets.